Gold has historically served as a foundation for monetary stability, and its role is resurging with the rise of the BRICS currency initiative. The BRICS nations Brazil, Russia, India, China, and South Africa are actively exploring a unified currency backed by gold to counterbalance the dominance of the US dollar in global trade. As international financial dynamics shift, gold-backed monetary systems are becoming increasingly relevant, fostering economic independence and reinforcing trust in emerging market economies. The concept of a BRICS currency arises from concerns over dollar hegemony, which has long dictated trade and financial policies worldwide. Many BRICS nations seek a more resilient alternative that mitigates the vulnerabilities associated with excessive reliance on the dollar. Gold-backed currency offers a tangible store of value, reducing exposure to inflationary risks and promoting stability in cross-border transactions. By integrating gold into their financial systems, BRICS nations aim to enhance economic sovereignty and protect their assets from external monetary pressures. China and Russia, in particular, have been aggressively accumulating gold reserves, strengthening their financial positioning for a potential currency transition. As central banks increase gold holdings, the possibility of a BRICS currency backed by gold gains momentum. The shift toward gold-based trade settlements could redefine international commerce, allowing member nations to conduct transactions with intrinsic value rather than fiat-backed financial instruments. This paradigm shift challenges traditional financial frameworks and accelerates the adoption of alternative currency systems. The role of gold in global finance remains significant, particularly as inflationary pressures continue to erode fiat currency value. The BRICS currency concept aligns with historical monetary principles where gold served as a benchmark for economic stability. Unlike fiat currencies susceptible to government policies and economic downturns, gold maintains its purchasing power over time, making it an ideal anchor for a currency system designed to withstand financial turbulence. The introduction of a BRICS gold-backed currency could also impact the global commodities market, since many BRICS nations are major commodity producers. Transitioning to gold-based trade settlements may shift pricing dynamics in critical sectors such as oil, natural gas, and agricultural exports. This move could lead to direct exchanges of goods for gold-backed currency, bypassing traditional financial intermediaries and reducing dependency on Western-controlled banking networks. Gold-backed trade agreements within BRICS nations would enhance economic cooperation while reducing transactional costs associated with currency conversions. As these economies embrace alternative settlement methods, their financial independence strengthens, decreasing reliance on foreign exchange reserves tied to the dollar. This transition would also protect member nations from sanctions and financial restrictions, reinforcing their ability to conduct international trade on their terms. The rise of BRICS currency initiatives is not without challenges, as logistical and geopolitical hurdles must be addressed. Establishing a standardized currency system requires extensive coordination among member nations, ensuring compatibility across financial institutions, trade policies, and digital payment infrastructures. Moreover, existing global financial systems resist fundamental change, necessitating careful navigation through potential regulatory opposition and economic shifts. Gold's resurgence within the BRICS framework signals a broader transition toward asset-backed financial structures, as blockchain technology and digital finance integrate with gold-backed instruments. Decentralized financial solutions may emerge, offering additional layers of security and transparency. These innovations could reshape monetary policies worldwide, positioning gold at the center of a multifaceted financial ecosystem that balances tradition with modern technology. Investors closely monitor BRICS currency developments, assessing potential impacts on gold valuations and market demand. If BRICS nations successfully implement a gold-backed currency, global gold reserves may experience increased demand, driving prices upward and influencing investment strategies. Market analysts foresee a potential recalibration of financial portfolios as investors hedge against fiat instability by acquiring gold-backed assets. Western financial institutions also face strategic adjustments in response to BRICS initiatives. As the dollar's dominance weakens, central banks and policymakers must reevaluate monetary strategies to remain competitive. The potential shift toward multi-currency trade settlements necessitates economic adaptations, reinforcing diversification efforts in reserve holdings and global financial diplomacy. The geopolitical implications of a BRICS gold-backed currency extend beyond financial markets, influencing international alliances and diplomatic relations. A unified BRICS monetary system challenges traditional Western financial control, fostering greater autonomy for emerging economies. As more nations seek alternatives to dollar-based transactions, financial power dynamics undergo a fundamental transformation, reshaping global economic governance. The future of gold-backed BRICS currency remains uncertain, yet its influence on global finance cannot be ignored. Whether through official implementation or gradual financial realignment, gold continues to play a pivotal role in shaping monetary policies. As nations explore financial alternatives, gold's historical significance remains intact, cementing its status as a timeless store of value within the evolving digital economy. The rise of BRICS currency initiatives marks a turning point in financial history, redefining trade mechanisms and monetary structures worldwide. Gold's resurgence within this framework reinforces its enduring relevance, bridging historical monetary principles with modern financial innovations. As economic landscapes shift, the interplay between gold, blockchain, and decentralized finance may lead to new financial paradigms, revolutionizing how nations engage in global trade and monetary policy.